Hmm. Okay, good morning guys. Let's take up the questions. Okay. So, first illustration, income from other sources. First illustration, let's read the question. Rahul, a resident Indian, holding how much? 28% of equity shares in a company, took a loan of rupees 5 lakh from the same company. On the date of granting the loan, the company had accumulated profits of rupees 4 lakhs. The company is engaged in manufacturing activity. Is the amount of loan taxable as deemed dividend if the company is a company in which the public are substantially interested? First question. Come on, tell me. What do you understand by the question? Rahul is a shareholder. He has taken a loan from the company amounting to 5 lakh. So 5 lakh loan is given by the company to the shareholder. How much is the shareholding? Is it more than 10%? And how much is the accumulated profits? So 5 lakh will be deemed dividend or 4 lakh will be deemed dividend? Why? Because the loan amount taken as on that date, the accumulated profits of the company are only 4 lakh. So 5 lakh cannot be treated as deemed dividend, only 4 lakh will be treated as deemed dividend, yes or no? Only to the extent of accumulated profits, yes or no? So 4 lakh will be deemed dividend, but that 4 lakh will be deemed dividend only if Rahul is getting that loan from a closely held company, meaning a company in which public is not substantially interested. So first question is saying, is the amount of loan taxable as deemed dividend if the company is a company in which public are? So the company in which public are substantially interested is not a closely held company, it is a widely held company. It is a widely held company, and if the loan is given by that company, then it will not be treated as a deemed dividend. Yes or no? So write down here only. In the question only, write down. Is the amount of loan taxable as deemed dividend? Write down here 222E. Tick mark or cross mark? Cross mark. This is not a deemed dividend. Why? Because the company is a company in which public are substantially interested, meaning not a closely held company. And because of that reason, the loan taken is not a deemed dividend. Yes or no? What would be your answer if the lending company is a private limited company? Private limited company, meaning which is not a company in which the public are substantially interested, meaning now it is a closely held company. And a closely held company has given a loan of rupees how much? 5 lakhs to the shareholder. So it will be a deemed dividend or not a deemed dividend? Tick mark or cross mark? Tick mark. And 5 lakh rupees loan was given, no? So for full 5 lakh will be deemed dividend? No. So we'll write 5 lakh, we'll cut it and we'll write accumulated profits for only 4 lakh. So 4 lakh is a deemed dividend. Yes or no? Very difficult question, no? Question number 1 done. Difficult, huh? You're saying yes? Done, no? Question number 1. Read the answer at home, huh? You will get that same answer. Now come to illustration number 2. This is a very good example. Mark this important. Very good example. Okay. Shall we start? Mr. A dealer in shares, received the following without consideration during the previous year 25-26 from his friend Mr. B. First of all, who is Mr. A? Mr. A is a dealer in share, right? Underline. Mr. A is a dealer in shares. Okay. Now he is receiving 1, 2, 3 items. 3 items without consideration. If you receive something without consideration, that can be treated as your gift. Okay. During the previous year from his Friend. Underline friend. Friend means a relative, no? Or a non-relative? So, not a relative. Not a relative. So, if from non-relative you are getting following items, it will be treated as, it may be treated as your taxable gift. Yes or no? So, first thing you are getting, cash gift of 75,000 on his anniversary, 15th April, meaning this year. This year on 15th April, he is getting a cash gift, meaning sum of money. What is the amount? On his anniversary, no? Anniversary means marriage. Or marriage anniversary. It can be birth anniversary also. Yes or no? It can be any anniversary. We don't care. Was it a marriage? No. So the gift will be taxable. Why? Because it is received from a non-relative and the amount is also more than 50,000. So full 75,000 will be taxable. Yes or no? So write down full 75,000 here. It will be taxable. Now he is getting what? After cash he is getting bullion. Bullion means what? Jewelry. Bullion means jewelry. You know na that gold coins, gold bars, silver bars. Yes or no? The fair market value of which was how much? 60,000. Fair market value was? Oh, on his birthday. On 19th June. So tell me, this year only, apart from sum of money, he is receiving something without consideration. What thing is receiving? Jewelry. And the value of that jewelry is more than 50,000. Can I say entire 60,000 will be taxable now? Now point number 3 will be important now. Please pay attention. A plot of land also is receiving at Faridabad. Plot of land at Faridabad. This year only on 1st July 2020. And stamp value of which is 5 lakhs. Okay, no? And Mr. B had purchased the land in April 2009. Who is Mr. B? Friend. So B had purchased in 2009 and this year when its stamp duty value was 5 lakhs, that time B had given you this plot of land without consideration. And what is the value? 5 lakh. Is the 5 lakh more than 50,000? Yes or no? So entire 5 lakh will be taxable as your gift. Now see, if an immovable property which you have received and for that gift provisions are made applicable to you, hello, then whenever you will sell this land in future, will you calculate capital gain? So to calculate that capital gain, what cost you will take? Cost to previous owner. If the gift provisions were not made applicable to you and this 5 lakh was not taxable in your hands, then you would have taken cost to previous owner. Yes or no? And if the gift provision are made applicable and this 5 lakh stamp duty value is already taxed in your hands as your gift. Now whenever you will sell this land in future, you will calculate capital gain. At that time what cost you are going to take? 49,4. The stamp duty value of this land which is already considered for the gift provisions right now. Yes or no? Will be later on treated as your deemed cost of acquisition as per 49,4. Do you remember yesterday we did 4 cases? Out of those 4 cases, this was one of the case. But I took the example in that I took the value of the land 10 lakh. Right now the value is 5 lakhs. The difference is only the amount is changing. The concept is same. So when Mr. A will sell this land in the future, will Mr. A calculate the capital gain? Yes. So at the time of calculating the capital gain, Mr. A will take 49,4 as a cost. Why? Because for this land, right now, the gift is already taxed in the hands of Mr. A. Yes or no? Sure, sir. Now see, they could have confused you. If they would have given you cost to Mr. B, when Mr. B acquired, and he has acquired this land for rupees 85,000. So cost of acquisition of B is already given. Cost to previous owner is already given in the question. For example, if it was given, yes or no, then they would have confused you. You would have taken that 85,000 as cost. If I would have been your examiner, I would have definitely given B's cost also, so that you commit a mistake. That sir, B acquired for how much? 85,000. Cost to previous owner was 85,000. Mr. A acquired the asset by way of gift. So mode specified under section 49(1). So accordingly, as per 49(1), the cost to previous owner 85,000 will be deemed to be the cost. Gone. Gone. If you have charged this 5 lakh stamp duty value as your income under the head IFOS as your gift right now, later on whenever you will transfer this asset, this 5 lakh only will be treated as your deemed dividend. You will have to ignore cost to previous owner. Yes or no? And what period of holding you will take? When did land came to you? Land came to you on 1st July 2000. So you will take period of holding from 1st July 2025. And the cost of acquisition of this land later on for Mr. A will be 5 lakhs only. Yes or no? Which is right now considered as gift. Understood? Should I move ahead? Everyone understood? No, this is very important point. Huh? Okay. Now Mr. A purchased from his friend Mr. C. Again see. A is purchasing now from his friend Mr. So first of all, friend is a relative or not a relative? So from a non-relative, he is purchasing what? Who is also a dealer in shares. C is also a dealer in shares. But from friend, he is purchasing 1000 shares. Of which company? X Limited. For rupees 400 each. Yes or no? On what date? 19th June 2000. And the fair market value of these shares were 600. So are you buying the shares for more than fair market value or equal to fair market value or less than fair market value? So consideration is less than fair market value. So it is bought for inadequate consideration. So can I say shares bought for shares acquired for what? Inadequate consideration or without consideration? Inadequate consideration. What is the difference? 200 rupees, no? 200 into 1000 shares. So 2 lakh rupees difference is there. And that difference will be taxable for you as your gift because it is coming from a non-relative. Yes or no? But sir, the shares which are coming to you is not coming as a capital asset. It is coming as your stock in trade because you are also a share dealer. In the first line it is given. You remember why I exert so much of importance to small points? Because they test these points like this. So if the shares are received by Mr. A, who is a share dealer, he will be receiving those shares as capital asset or he will be buying those shares as stock in trade. So if you buy your shares as stock in trade, definitely you are going to buy for less only, no? Then the benefit arising, the difference is not treated as your IFOS. It will be already taxed under the head. What? PGBP. So even if the shares are acquired as what? For inadequate consideration, can I say shares are not acquired as a capital asset? Not a capital asset. For whom? For Mr. A. Hence. Gift provisions will be applicable or will not be applicable. So here IFOS provisions, gift provisions, 56 to 10 will not be applicable. Why? Why not applicable? Because the shares are not acquired as capital asset. The reason is given in red color. Okay. And that is the reason why we are not taxing this difference under the head IFOS. Now these shares are sold by? These shares are sold by A. Yes or no? A sold these shares in the course of his business on what? 23rd July. And at how much he is selling? Are they telling you? No. So whenever he will sell it as stock in trade, at that time he will calculate PGBP income. So while calculating PGBP income, selling price of these shares will be taken as your business income minus cost will be 400 because he is buying at 400. So the entire difference of 200 which was getting taxable under the, which could not be taxed under the head IFOS as your gift will be taxable as your PGBP income. Understanding? Hence the gift provisions are not applicable. So further on what? 1st November 2025, Mr. A took possession of a property, meaning buying the immobile property. Yes or no? Possession means on this is, can I say, this is the date of sale agreement. Date of taking the possession is as good as date of sale agreement. Yes or no? Sorry, wait. Don't write it, date of sale agreement right now. We'll have to read it first. Immobile property which is office building. And this office building he is purchasing, which he booked 2 years back. At how much? So can I say this is the consideration? How much is the consideration? So he booked for 20 lakhs, meaning he is buying for 20 lakhs. 2 years ago only he has booked. Okay, no? Stamp duty value of the property as on 1st November 25 was how much? 32 lakhs. As on the date of taking the possession. Yes or no? And as on the date of booking meaning 2 years back, it was. So what I will do with the stamp duty value of 2 years back? When I am taking the possession? This year. When I am buying? This year. Yes or no? So which stamp duty value I will take? This year's stamp duty value. But wait, if I will take this year's stamp duty value at the time of taking the possession, it is as good as date of registration. Taking the possession meaning registration is done. If nothing is given, no separate date is given, we will assume that as on the date of taking the possession, registration is done. So date of registration is 1st of November. On that date, what was the stamp duty value? 32 lakhs. Whenever the booking was done, don't you think at the time of booking, the sale agreement would have been made? Yes or no? So at the time of booking, the sale agreement was made 2 years back. At that time, what was the stamp duty value? 23 lakhs. Yes or no? So can I say we have two stamp duty values now? One is as on the date of taking the possession, meaning as good as registration, and as on the date of booking, as good as date of sale agreement. You have two stamp duty values. Which stamp duty will you take? Usually we take date of registration only. So we will have to take 32 lakhs only. But one very important information they have given. What information they have given? That he had paid 1 lakh by account pay check on the date of booking, meaning as on the date of sale agreement only, he had paid part of the consideration by way of prescribed mode. So which stamp duty value we are going to take? The stamp duty value as on the date of sale agreement, meaning we'll ignore this stamp duty value. Okay, no? And we'll take what? 23 lakhs. Now tell me, what is the stamp duty value? 23 lakhs. And what is the sale consideration? 20 lakhs. You are buying a property whose stamp duty value is 23 lakh and you are buying it for 20 lakh. Are you buying it for adequate consideration or inadequate consideration? Inadequate consideration, yes or no? So can I write down here? You are buying an immobile property. You are buying an immobile property. Sir, for you immobile property is a capital asset. Why it is a capital asset? Because you are not a property dealer, you are a share dealer. And for a share dealer, immobile property is his capital asset. So the asset is coming to you as a capital asset. Yes or no? Now this capital asset acquired for inadequate consideration. Tell me yes or no. Now here the provisions of 56(2)(10) will be applicable. Why applicable? Why applicable? Because you are buying it from one of your friends. Yes or no? Sorry, they have not told you anything, meaning that means you have bought it from any non-relative and you have bought it for inadequate consideration. What is the difference? Difference between the stamp duty value and the consideration? 3 lakhs. Is that difference more than 50,000? And that difference is also more than 10% of 20 lakhs. 2 lakh rupees. Yes or no? So if the difference is more than 50,000 as well as more than 10%, then that entire difference is also treated as your gift. So gift provisions are applicable, and in that gift provisions, how much will be taxable? 2 lakhs. Sorry, 3 lakhs. 3 lakhs will be taxable because 3 lakh was the difference between what? Stamp duty value and the consideration, which is more than 50,000, more than 10%. Understanding or not? See now, so far, what has happened? He has received cash gift 75,000 taxable under the head IFOS. He has got gift of bullion, how much? 60,000 taxable under the head IFOS. He has received a plot of land without consideration from his friend, 5 lakh rupees. That is also taxable under the head IFOS as your gift. But he has received some shares as is stock in trade. That will not be taxable under the head IFOS as gift, because shares received by him, not as a capital asset, as a stock in trade. Whenever he will sell this share, he will calculate PGBP at that time. Yes or no? And while calculating PGBP, he will take a cost of rupees 400. Yes or no? But has he received some immobile property? Yes. It was his capital asset? Yes. And he's received it for inadequate consideration, and the difference between the stamp duty value and the consideration is 3 lakhs, which is more than 10% of sale consideration, more than 50,000, hence the entire difference is also taxable as gift. So under the gift provision, which items are taxable? Have you identified? Yes or no? Now what they are telling you, read the next line. This year only, on 1st March 26, he sold the plot of land at Faridabad for, does he have a plot at Faridabad? He acquired it, no? Or he received as a gift, and for which the gift provisions were also made applicable. So now whenever he will sell this Faridabad plot this year, yes or no, he will calculate capital gain. So what will be the full value of consideration? 7 lakhs. Minus transfer expense, no transfer expense, net consideration 7 lakh minus cost of acquisition. Understood? As per 49(4), 5 lakh will be the cost of acquisition. So what will be the capital gain? 2 lakhs. So that capital gain will be taxable for this year, yes or no? But wait. This capital gain will be short term or long term? Why short term? Because the Faridabad plot came to you on 1st July. 1st July 2025, and you have sold that plot on 1st March 2026, within 24 months, yes or no? Period of holding is less than 24 months, hence that 2 lakh will be short term gain. Did you understand? Next one, compute the income. Compute the income of Mr. A, chargeable under the head income from other sources and capital gains. How much is the capital gain, guys? 2 lakh, and that capital gain will be short-term capital gain, yes or no? And how much will be the IFOS income? Take your calculator. 75,000 plus 60,000 plus 5 lakhs and plus 3 lakhs. How much? Check the final answer. And mark my words. If you ever get case scenarios, no, you will get case scenarios like this. Based on this, MCQs will be there in the question. And if you get full-fledged question like this, no, minimum this question will be for 8 marks. Minimum 6 to 8 marks. Getting my point? Now tell me, what is the problem in this question? If you know all the provisions properly, no, and on time the provisions will click you, this question is so easy. And if these type of, see, whenever they want to make your paper a little bit difficult or tricky, no, they will ask you questions like this. Everything you would have studied in the class, okay, but expecting that they are going to ask easy questions in the exam is not always going to happen, okay, no. Tricky questions are like this. And by the way, this is not a tricky question at all. Understanding? Should I move? See, 9,35,000 IFOS and 2 lakh capital gain. Okay. Now, illustration number 3. I'm giving you 5 minutes. Come on, start. Think from the point of view of recipient. Recipient. Become a recipient. Who is getting the asset? Who is getting the sum of money? Think from the point of view of recipient. Identify the recipient first. Small adjustment like this may come in the exam. Done? Done? Should I discuss? Okay. They are telling you to discuss the tax liability. Discuss the taxability or otherwise of the following in the hands of recipient. Okay. Under section 56(2)(10), whether it will be taxable as gift or not. If yes, then why? If yes, then why and how much? And if no, then why not? Okay. Next one. Akhil HUF received. Who is recipient? No. Akhil HUF. HUF is a recipient. Okay. Received how much? Receiving sum of money. And the sum of money is more than 50,000. From whom? Niece of Akhil. Can I say niece of Akhil is not a member of Akhil HUF? So non-member is not a relative. So HUF is getting from a member, then it is coming from a relative. HUF is not getting from member, meaning from a non-relative. The amount is how much? 75,000. Amount is more than. Will it be taxable? It will be taxable as your gift. 75,000 taxable. Done, sir? Next one. Nitisha, member of her father's HUF, transferred a house property to HUF. Now who is the assessee? Nitisha. No, HUF. HUF is receiving from Nitisha, member of father's HUF. Meaning HUF is receiving from member. Member is a relative. So, member is giving what? A house property, meaning immovable property. The stamp duty value is 9 lakh, even if the value is more than 50,000. But since it is coming from a relative, nothing will be taxable. Not taxable. Done, sir? Next one. Next one is Mr. Akshat. So recipient is Mr. Akshat. He has received how many shares? 100 shares of A Limited from his friend. Friend means relative, non-relative? Not a relative. So from a non-relative he is getting what? Shares. Okay, now as a gift on the occasion of his 25th marriage or 25th marriage anniversary. So marriage anniversary gifts are taxable provided the value is more than 50,000. Yes or no? So this year on the occasion of marriage anniversary he is getting shares. Shares from a non-relative will be considered for gift provisions. Gift provisions will be applicable. Yes or no? The fair market value on that date was 100 per share. So calculate the fair market value. So shares whose value was 10,000. Fair market value was 10,000 is received without consideration during this year from non-relative, will be covered by gift provisions. See, if this was the only gift which he had received in this year, then nothing was taxable. Why? Because the value is not more than 50,000. But along with this, during the previous year, he is receiving what? Jewelry also, worth 45,000 FMV from his nephew on the same day. First of all, tell me, nephew is a relative or not a relative? Nephew is also not a relative. My brother is my relative, but my brother's children, they are not my relatives. Yes or no? So this is also received from a non-relative. What you are receiving from non-relative? Jewelry. So this will be also covered by gift provision. What is the value? So during this year, you have received specified movable assets, shares and jewelry without consideration, and the aggregate fair market value of all those assets in this year is more than 50,000. So entire value will be taxable. So here how much will be taxable? 55,000 will be taxable in the hands of Mr. Akshat. Done, sir? 55,000 will be taxable. Understood, no? Easy, no? Now the last transaction. Come on. Kishan HF gifted a car to? Who is the recipient? Son of Karta, meaning member of the HF. Yes or no? He is that individual. That individual member is receiving what? Car. Car from whom? Kishan HF. First of all, from the point of view of HF, from the point of view of member is a relative, and from the point of view of member also, HF is a relative. So first of all, HF is a relative. HF is a relative. So whatever may be the value of the asset, whatever may be the gift, it will not be taxable in the hands of member. Yes or no? Because it is coming from HF, who is considered as a relative for member also. Yes or no? And first of all, the asset given is car, which is not a specified movable asset. So even if the value is more than 50,000, nothing will be taxable. Did you understand this answer? Guys, everyone? So it will not be taxable. Done, sir? Question number 4. Come to question number 4. Mark this question important. This is there in ICA study mat since very long time. Eager to come in the exam, but they have never asked this question. But it is a good question, huh? Now see, we'll first talk about Hari. Hari, a property dealer. So for Hari, properties are stock in trade. Okay. Sold a building. So Hari is selling his stock in trade in the course of his business to his friend, who is Mr. Rajesh. And Rajesh is a dealer in automobile spare parts. So for him, automobile spare parts are stock in trade, but not the building which he is getting, because he is getting the building as a capital asset. Okay. Now for how much he is selling? 90 lakhs. On what date? 1st January 2026, when the stamp duty value was 150 lakhs. Ayyo. The agreement was, however, entered into on 1st September 2025, when the stamp duty value was 140 lakhs. Now Mr. Hari had received a down payment of 15 lakh from Rajesh on the date of sale agreement. Part of the consideration is received, but that is not received in. So 140 lakhs stamp duty value will not be considered, and 150 lakhs stamp duty value will be considered. Yes or no? Now see, they are saying discuss the tax implications in the hands of Hari and Rajesh, assuming that Mr. Hari has purchased the building for 75 lakhs on 12 July 2024. Okay. So first you are supposed to solve this question like this. Yesterday, no, 4 cases I have told. 4 cases. One of those cases is this. Instead of A and B, it is Hari and Rajesh. Instead of the value 10 lakh, now there will be a separate value. 150 lakhs. Instead of the consideration paid, which was how much? 8 lakhs. You remember? 8 lakh consideration paid. Immovable property whose stamp duty value was 10 lakhs. For that 8 lakh consideration is paid. Inadequate consideration. Hello? Now 8 lakh. Instead of 8 lakh, how much is the consideration? 90 lakhs. Instead of stamp duty value of 10 lakh, how much is the stamp duty value? 150 lakhs. Same thing. Yes or no? But now you are supposed to tell the tax implication for both Hari as well as Rajesh. Okay, no? So first of all, what did you understand from this question? Tell me. There are two persons. First is Mr. Hari. Hari is a property dealer, no? So I will write down Hari is a property dealer. Okay. He acquired what? Hari had acquired a building. When did he acquire that building? Hari acquired the building on what date? 2024, no? When? Hari's stock in trade he acquired on 12th July 2024. So Hari acquired on 12th of July 2024. Okay. At what cost? Cost was 75 lakhs. Hari acquired for 75 lakhs. Yes or no? Now Hari is transferring, a property dealer is transferring his property. To whom? Mr. Rajesh. So Rajesh is color, red color. Mr. Rajesh. Rajesh is a automobile spares dealer. Done, sir? So for Rajesh, whatever property will come as his capital asset. Now what Hari is doing? Come on, tell me. Hari is transferring the building to Rajesh. So this building is transferred. Building, which is a stock in trade, for whom this building is transferred. I will write down building is transferred. Okay. Now this building for Hari, this building is, tell me, for Hari this building is stock in trade. Done, sir? Because he is a property dealer. And for Rajesh, this same building is capital asset. Now, building is transferred for how much? For a consideration of rupees 90 lakhs. Yes or no? And two dates are given. One, date of sale agreement. What was the date of sale agreement, guys? Not given, no? Or given? 1925. Date of sale agreement is given, no? Date of sale agreement 1925. On that date, the stamp duty value was 140 lakhs. I don't 90 lakhs like this. 140 lakhs, right? And when the agreement was made? Sorry, when the transfer was made? 11/26. Yes or no? Meaning, can I say date of registration was 11/26. As on that date, the stamp duty value was rupees 150 lakhs. Done, sir? So now these are the informations given in the question. Now tell me, since part of the consideration is not received by way of what? Prescribed modes, on or before 1/9/2025. Therefore, SDV as on date of sale agreement cannot be taken. Okay. So I will ignore this stamp duty value 140. Hence I will consider this 150 as stamp duty value. Done, sir? Now, what is the stamp duty value? 150 lakhs. What is the consideration? 90 lakhs. Consideration is less than the stamp duty value. Now, first think from the point of view of Hari. Hari is selling what? Building, meaning his stock in trade. Okay. So this building is sold by Hari on 1/1/2026. When he will sell his building, what he is going to calculate? PGBP income. Yes or no? But to calculate this PGBP income, since the consideration, which is how much? 90 lakhs less than stamp duty value of 150 lakhs, and the difference between both of them is 60 lakhs, which is more than 10% of what? Sale consideration. Yes or no? Therefore, which section will apply? 43 CA will apply. 50 C will not apply. 43 CA will apply. Why? Because he is selling stock in trade. Yes or no? Hence PGBP income will be equal to 90 lakhs minus 75 lakhs. No, it will be 150 lakhs minus 75 lakhs. Sale consideration will not be taxable under the head PGBP. Stamp duty value will be treated as your PGBP income as per 43 CA. Yes or no? So PGBP income will be how much? 75 lakhs. Understanding or not? This will be his PGBP income. In the hands of Hari, the tax treatment is done. Okay. Now let's come for Rajesh. Now Rajesh is receiving what? Rajesh is receiving that same building, no? Building. On what date? On what date? Building is building acquired by Hari on 12th July was given to Rajesh on what date? So building acquired on 1/1/2026. Okay, no? Now building is acquired on 1/1/26 for adequate consideration or inadequate consideration? For inadequate consideration. Since consideration, which was 90 lakhs, is less than stamp duty value of 150 lakhs. Yes or no? And the difference is how much? 60 lakh, which is more than 50,000, and also more than what? 10% of the consideration. Therefore, here 56 to 10 will be applicable or will not be applicable? Will be applicable or will not be applicable? Will be applicable, because this benefit is happening from a friend. Hari is a friend, meaning a non-relative. Yes or no? So both of them are what? Relatives or non-relatives? So I will write down Mr. Hari and Mr. Rajesh are non-relatives. Are you understanding what is happening? Not a relative. Hence 56 to 10 will be applicable in the hands of Mr. Rajesh, and taxable IFOS income. Taxable IFOS income will be how much? Will be how much? 60 lakhs, no? That difference, which is equal to 60 lakhs, will be taxable as income from other sources. Now they have not given in the question, but I am telling you. Let's say for example, Rajesh sells this building in future for 180 lakhs. Will Rajesh calculate capital gain? I am asking you, huh? If Rajesh is going to calculate capital gain, then what will be the cost of acquisition? 150 lakhs as per 49(4), because the gift provisions are made applicable. So write down here, if Rajesh later on transferred the above building, then capital gain will be calculated for Rajesh, but to calculate that capital gain, cost of acquisition of such building, to calculate that gain will be equal to 150 lakhs under section 49(4). Done, sir? This is the end of the answer. See, this is the way in which the answer, if you will present in your exam like this also, no problem. No problem. But see, I have written like this, Hari Rajesh. How can you do? Hari Rajesh. You can write like this also. So whatever way you want to present horizontally, you present horizontally. If you want to present vertically, you present vertically. Ultimately, they need to see this answer. Understanding? So even if you present in this way, there is no problem. But just see the answer given there. You will go mad. But at home, if you will read today, no, that answer will make sense. Because that entire thing which is given in the answer, no, is presented in this way, in the chart format. Okay. Now see, in that same question they are saying, would your answer be different if Hari was a share broker instead of property dealer? Would your answer be different? The answer is yes. Now what will change? Come on, you tell me. Nothing will change in the hands of Rajesh. In the case of Hari, now instead of calculating what? Now you are going to calculate capital gain. because he is transferring his capital asset. And now 50C will apply, but the answer will remain same. Understanding? So what I will do? Copy paste. And what information I am going to change? Only the information relating to Hari. That will be changed. Yes or no, sir? I hope you all are understanding, huh? So now tell me, Hari and Rajesh both are not relative. Now only one information is changed. Hari is a share trader, no? Share broker. Okay. Hari is a share broker. Only this information they have changed. So for the share broker, the building will be stock in trade or a capital asset. For him also, it was a capital asset. Getting my point, sir? Now, if he is transferring his capital asset, will he calculate capital gain income or PGBP income? So now he is going to calculate capital gain income. Yes or no? And for capital gain, 43CA will applicable or 50C will be applicable? 50C will be applicable. Yes or no? And as per 50C, now hence capital gain will be how much? Full value of consideration, which is 90 lakhs or 150 lakhs? 150 lakhs minus transfer expense, nil. Net consideration 150 lakhs. And what is the cost of acquisition of this building? 75 lakhs. Yes or no? So this 75 lakhs will now be short term or long term? Short term. Short term capital gain. Why short term capital gain? Why short term capital gain? Because the period of holding of that building will start from 12th of July 2024 to 1st of January 2026, which is less than how many months? 24 months. Hence that entire 75 lakh will now be treated as is capital gain income, but it will be a short term capital gain. Yes or no? Instead of PGBP, and everything else remaining same. Did you understand? Sure, sir. Should I move ahead? Okay. Mark this question important, huh? Good question. Now all the other questions are very easy questions. Now, hey, see, I was telling you about those examples on life insurance policy, no? Huh? So those examples are starting from, yes, these examples which I am telling you, no? Example 1 from page number 3.523. Yes or no? Check this page number 3.523. From example number 1, whatever examples are starting, you are going to do all those examples properly at home, I am telling you. Because you never know, any one of these examples will be directly asked in the exam. Directly, without a change in the numbers also. So do all those examples at home today itself. Okay, no? What are those examples based on? Yesterday we have done some policies, maturity value, taxable, exempt. We have done all those things, no? Yes, that is given in the form of examples over there. Do them today at home. Now which illustration? Next illustration? Page number? Now see, illustration number 5. Very difficult, huh? Read. Compensation on account of disaster received from a local authority by any individual or his or her legal year is taxable. Examine the correctness of the statement with reference to the provisions of Income Tax Act 1961. So they are saying that if some disaster has taken place and because of that disaster, if some compensation is received, that compensation will be taxable. Whether the statement is true or false. So the statement is false. Because any compensation on disaster which you receive, no, is fully exempt as per the provisions of section 1010 BC. There is one section 1010 BC. So as per section 1010 BC, when you receive compensation, when any person receives a compensation from government or any local authority, central government, state government or any local authority, then that compensation will be fully exempt. It will not be a taxable income. Yes or no? But see, that compensation is received towards a loss which you have already claimed as a deduction under the provisions of Income Tax Act. Then it will not be exempt under 1010 BC, then it will be treated as your deemed PGBP income. For example, some disaster has taken place and because of that disaster, some loss has happened in your business. Yes or no? And that loss you have already claimed as a deduction under PGBP head. Loss incurred in the course of business or profession. Deduction you have already claimed. Now, to compensate for that loss, if the compensation is given, then that compensation will not be exempt under 1010 BC. Then that compensation will be taxable as your deemed PGBP income. But if it is received otherwise, then it will be fully exempt under section 1010 BC. I have given you the notes. Okay. So in those notes, you will see exemption topic is there. Which topic? Exemption. In that exemption topic, I have covered this exemption also. Okay. So will you remember this? Okay. Illustration number 5 is done. Come to illustration number 6. Which is the next illustration? 6. This is also very difficult example. Huh? Very difficult. Interest on enhanced compensation. Interest on received by Mr. G during the previous year 25-26. How much interest he is receiving? Out of which interest of rupees, out of this interest, 1,50,000 relates to 2021, 1,65,000 relates to 21-22, 1,85,000 relates to 22-23. Discuss the tax implication of such interest for the assessment year 26-27. Tell me. Out of this entire 5 lakh, only some interest relate to this year. Rest, the other interest relating to earlier years. So that earlier year's interest will be ignored, no? Only this year's interest will be taxable, no? Or that interest also will be taxable. This year's interest will also be, meaning entire 5 lakh will be interest on compensation or enhanced compensation will be always taxable on receipt basis. So entire interest of rupees 5 lakh, whether relating to this year or any other year, will be taxable in the year of receipt. Yes or no? But one very important thing is there. You are going to get standard deduction at the rate of 50% out of that 5 lakhs. So how much will be the net amount taxable? 2,50,000. Yes or no? So this is the answer which is given there. Okay? Just read it today. Done, sir? So how much is taxable? See, 2,50,000. Now let's move on to the test your knowledge section. TYK. TYK. Question 1. Very difficult question. Huh? Now I will see that how much you know. Because you are going to tell that these incomes are taxable under which head. So whether you will be able to classify these incomes in the exam or not. First of all, rental income in case of a property held as stock in trade for 3 years. Come on, tell me. House property or PGBP? Sir, property is a stock in trade, no? Buying and selling of this property will result into PGBP income. But holding this property and giving on rent will result into rental income will always come to house property, even if the property is held as stock in trade. I have already told you, yes or no? So this will go to which head? Income from house property. Write down besides this only. Okay. Salary received by a partner from his partnership firm. Sir, it is a salary, no? Salary taxable under the head income from salary, no? Salary is taxable under the head income from salary only if it is coming from employer and employee. And there is no employer-employee relationship between the partner and the partnership firm. Whatever salary received by the partner from the partnership firm will be taxable under the head PGBP. There was a specific charge. but it will be taxable only to the extent allowed in the hands of firm. If you remember, whatever amount was allowed in the hands of firm as a deduction, to that extent only it will be taxable under the head PGBP. But it will be taxable under the head PGBP. Yes or no, sir? Done. Next one, rental income of a machinery. No, it will be either PGBP, and if it cannot be taxed under the head PGBP, then under the head IFRS. That camera example, my camera example is the best example for that. Yes or no? Next one, winnings from lotteries by a person having the same as business activity. Bloody, if you do that activity sometime or on regular basis, if any activity is a casual activity involving what? A chance of winning and losing, it will result into winnings income, and that winnings income will always be taxable under the head IFOS. Whether you do that activity as a business or not, we don't care. Yes or no? So it will be taxable under the head IFOS. Sorry, this will be taxable under the head IFOS. Done, sir? Next one, salary received by member of parliament. Very good. Then receipts without consideration. So receipts without consideration means what? Yes. So gifts, write down gifts. That will always be taxable under the head IFOS. In case of retirement, in case of interest on employees' contribution, if PF is UPF. Do you remember? 4 parts, lump sum, employees' contribution coming back will not be taxable, ignored. Interest on employees' contribution will go to IFOS. Employer's contribution and interest on employer's contribution will be treated as your profit in lieu of salary, taxable under the head salary. But interest on employees' contribution will not come to salary, it will go to IFOS. I've already told you, in the salary head only. Yes or no? So this will be taxable under the head IFOS, because this interest is interest on employees' contribution. Rental income in case of person engaged in the business of letting out of. But if he was engaged in the business of letting out residential properties, then business is giving the properties on rent only, but the properties are residential property. And even if it is your business, rental income from residential property will always go to house property. Yes or no? So this is it. Were you able to identify properly? Confident? Little confident? Okay. Examine whether the following are chargeable to tax and amount liable to tax. A sum of rupees 1,20,000 was received as gift from non-relative by Raj on the occasion of marriage of his. Who is the recipient? Who is the recipient? How come son? Son's marriage is there, no? Recipient is, see, sum of rupees 1,20,000 was received as gift from non-relatives by, so Raj is a recipient, but Raj is receiving this gift on the occasion of his marriage or his son's marriage. Will it be taxable or it will not be taxable? Full 1,20,000 will be taxable. Done, sir? Full 1,20,000 will be taxable because it is coming from non-relatives, and the amount is also more than, and it is coming on the occasion of marriage of his son and not on his marriage. Interest on enhanced compensation of 96,000 received in this year on 12th March for acquisition of urban land, of which 40% relates to last year. Tell me, even if 40% relates to last year, that 40% will also be taxable in this year, because it is taxable on what basis? So entire 96,000 will be taxable. So here you are going to tax 96,000. Full 96,000. Yes or no? Yes. Why? Because this interest is interest on compensation, 50% standard deduction. Very good. Minus 48,000. 48 only, no? So how much will be the amount, final amount? 48,000. Done, sir? Okay, now next question. On 10th of October 2025, 10th of October 2025. Just a second now. Mr. Govind, a bank employee, received how much? 5 lakh towards interest on enhanced compensation from state government. He is receiving this as interest on enhanced compensation in respect of compulsory acquisition of his land effected during 1718. Compulsory acquisition took place in 1718, and for that he is getting interest on compensation in this year. Out of this interest, 1 lakh 50 relates to 1819, 1 lakh 65 relates to 1920, 1 lakh 85 relates to 2021. He incurred 50,000 by way of legal expenses to receive the interest on such enhanced compensation. See, no deduction for any expense will be allowed on the incomes on which you get standard deduction. So even if you have incurred these legal expenses to recover that interest, yes or no, still that legal expense will not be allowed as a deduction. Why? Because you are getting standard deduction, no? Take that standard deduction and ignore all the expenses. Yes or no? So this 50,000 will be ignored. This 50,000 will be ignored since standard deduction is available. Standard deduction is available. So out of this 5 lakh, how much will be taxable in this year? Come on, tell me. Full 5 lakh will be taxable because even if it relates to earlier years, then also full 5 lakh will be taxable. But out of this, you are going to get standard deduction at the rate of 50%. So how much will be taxable? 2,50,000. Very difficult questions, no? Huh? How much of the interest on enhanced compensation would be chargeable to tax? Tell me. 2,50,000. Done, sir? Question number 4. Question number 4. Start. 4 and 5. Both you start, both you finish, then I will discuss both of them together. Okay? 4 and 5. Be careful, huh? Slowly. See, I am discussing the question now. Question number 4. Following details have been furnished by Mrs. Hemali pertaining to the year ended 31st March 2024. So tell me, who is the assessee? Mrs. Hemali. Okay, no? She is receiving cash gift of 51,000, meaning sum of money received without consideration. Amount is more than 50,000. From her, that's it. Not a relative. Not a relative. On the occasion of Shashti Patapurti. Oh, I told you yesterday only. A function like wedding, but this is not a wedding. Wedding function is not equal to marriage. Okay. So this will be taxable or will not be taxable? How much will be taxable? 51,000 will be taxable under the head IFOS as gift. On the same occasion, a diamond necklace, meaning jewelry, worth rupees 2 lakhs, her value is more than 50,000, was presented by her. Gone. Sister is a relative. So from relative, you are going to get a gift. That gift will be taxable or will not be taxable? Nothing will be taxable here. Okay, no? She celebrated her daughter's wedding. Her wedding or daughter's wedding? Today is daughter's wedding. See, today. Yes or no? So on the daughter's wedding, her friend. Whose friend? Hemali's friend. Huh? Hemali's friend, who is not a relative. Daughter's wedding is not your marriage. First of all, it is not your marriage. Second one, the asset is coming from a non-relative. Okay. So assigned in Hemali's favor a fixed deposit. Fixed deposit means what? What will be kept in fixed deposit? Alu bonda. Fixed deposit la you keep money only, no? So fixed deposit is as good as sum of money. Okay, no? Held by said friend in a scheduled bank. The value of the fixed deposit and the accrued interest on the said date was 52,000. So what is the total value coming to you? Total sum of money coming to you without consideration. Is it coming on the occasion of your marriage? No, your daughter's marriage. Is it coming from a relative? No, coming from a non-relative. Friend, yes or no? Entire 52,000 will be treated as sum of money received without consideration, will be taxable. Yes or no? So total taxable amount will be 1,03,000 will be taxable as your gift. Understanding? Compute the income as income from other sources. Okay, now fifth one. Examine the following transaction in the context of Income Tax Act. Examine. You have to examine. Okay. Mr. B transferred 500 shares of R Private Limited to Messrs. B Company Private Limited on 10th October 2025 for rupees 3 lakhs, when the fair market value was 5 lakhs. The index cost of acquisition of the shares of for Mr. B was 4,45,000. The transfer was not subject to STT. First of all, you are going to cut this word. Indexed. Write down only cost of acquisition. This indexed word is wrong. Okay, no? Because now the transfer is made on or after 23rd July 2024. The cost is not indexed. So let's say that the cost of acquisition was 4,45,000. Who is transferring? Okay, determine the income chargeable to tax in the hands of Mr. B and B Company Private Limited because of the above transaction. So for B, what will happen? Tell me. For Mr. B, capital gain will be calculated because he is transferring his capital asset. Capital gain will be calculated. To calculate that capital gain, what is the fair market value of the shares? And what is the sale consideration? So if the sale consideration is 3 lakhs and the fair market value is 5 lakhs, fair market value is higher. Do you remember 50 CA will apply? And as per 50 CA, your sale consideration will be ignored and the fair market value will be treated as full value of consideration. So what will be the FVC over here? FVC under section 50 CA will be rupees 5 lakhs. Yes or no? Minus the cost of acquisition, which is 4,45,000. Yes or no? So what will be the capital gain? 55,000 in the hands of Mr. B. And this will be short term or long term? Short term or long term? Why? Period of holding is not given in the question. And since they were saying indexed, meaning it is long term only. Yes or no? So this will be your long term capital gain. Under section 112 or 112A, because STT is not paid. See, so these are shares other than quoted shares. They are transferred without payment of STT. So the long term gain cannot be covered by 112A, it will be covered by 112. Yes or no? Done, sir. Now what will be the tax treatment in the hands of Mr. B Company Private Limited? Come on. B Company Private Limited. What will be the tax treatment? The shares are acquired for inadequate consideration. Shares. B Company is acquiring the shares, meaning capital asset. Shares which are capital asset acquired for what? Inadequate consideration. And what is the difference? 2 lakhs. Don't you think that the entire 2 lakhs will be taxable under the head IFOS as what? Gift in the hands of B Company Private Limited. Yes or no? So 2 lakh will be taxable as gift for the company, and 55,000 will be considered as LTCG in the hands of Mr. B. Understood, sir? Easy, difficult? Easy, no? So they are going to ask from point of view of both the parties, sometimes. Now Mr. Chazian is employed in a company with taxable salary income of 5 lakhs. He received a sum of rupees 1 lakh from Atma Charitable Trust, registered under 12AB by account pay check in December 24 for meeting his, instead of December 24, make it December 25 this year. Is the sum of money so received from the trust chargeable to tax in the hands of Mr. Chazian? Do you remember yesterday I told you exceptions? I am Dr. Hatlo COVID 47. H for hospitals and medical institution. U for universities and educational institution. T for. So if trusts are receiving something from you, will not be taxable for them as gift. And if you receive something from the trust, will not be taxable for you as a gift. Simple. So not treated as gift under section 56 to 10 for whom? Mr. Chazian. Since covered by exception. Covered by exception. Exceptions to section 56 subsection 2 clause 10. So under the exception it is written that if any gift is coming, any asset or sum of money coming from trust or charitable institution, will not be treated as a gift as per the exception to section 56 to 10. Hence the amount is not taxable in the hands of Mr. Chazian. Then why his salary and everything is given? To confuse you. That you don't focus on the correct thing. Understanding? Done, sir? With this the chapter comes to an end. Okay. See, I have given you extra questions for practice. Huh? If you don't practice them, then it is your mistake now. So we'll start with the new chapter.